Gold and silver go higher in the face of a dollar that falls. You look at gold, it's up 9.9% on average for 25 years. That's doubled the pace of the 10-year treasury. Gold right now has replaced the euro in terms of the second largest asset held by central banks right now for the first time ever. 18% allocation to central bank holdings, if we believe those numbers. The writing is on the wall. Gold and silver are replacing many traditional assets, along with other commodities too. Gold and silver are two of the only assets that haven't been allowed to find fair value when everything else has been distorted to the upside. Price discovery hasn't really happened in gold and silver for the numerous reasons.
Gold and silver have sold off over the past week. Gold prices are experiencing some mild selling pressure as they approach critical support around $2,300 an ounce. Meanwhile, the silver market has attracted some bargain hunters after falling 2% on Tuesday, dropping below its 50-day moving average. However, the precious metal is struggling to hold gains above $29 an ounce. But while that's happened, Bank of America analysts predict a potential surge in gold prices, with estimates reaching $3,000 per ounce within the next 12-18 months. However, they acknowledge current market flows don't necessarily support this price point. JP Morgan in its latest note said it remains structurally bullish on gold and silver, and perceives the recent consolidation as a buying opportunity with a target of $2,600 and $34 respectively in 2025. The current levels in copper, too, present a good re-entry point towards the brokerage's $11,500 target by third quarter of 2025, it added. Andy Schectman, co-founder of Miles Franklin, a precious metals firm with over $9 billion in sales, outlines the epic moves ahead in the gold and silver markets. Globally, there's a move towards de-dollarization. Some countries like the UK, Ireland, and the Cayman Islands may still hold U.S. debt, but major holders are moving away. Schectman believes that ultimately gold and silver will rise as the dollar falls. According to Mike McGlone, senior commodity strategist at Bloomberg Intelligence, the ramping up of Cold War 2.0 between China, Russia, Iran, and North Korea against the United States and its allies is a big reason why gold will likely outperform the broader metals complex in the second half of 2024. In his tweet, he said, "World order shift and falling grains, rising gold. The Bloomberg Grain Spot Sub-Index down about 20% versus gold up 20% on a one-year basis to June 25th may reflect enduring trends." Schectman believes gold and silver will rise in value as the U.S. meets its obligations through money printing or bond monetization due to inflation, default risk, and confiscation risk. He suggests that we haven't seen the full extent of this yet, and that the numbers could be much higher than currently anticipated. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
Everyone talks about the price of gold and silver and inflation and soft landing and all of the noise, but let's break it down and make it real simple. I mean, look, we're adding $1 trillion in debt every 100 days, and we have 150 trillion in unfunded liabilities. The national debt is up 11.5 trillion since 2020. And this is a country that has its fiscal house not in order. And when you look at the unfunded liabilities, who's going to pay for them? And when the Congressional Budget Office says in 6 years 100% of tax revenue goes just to pay mandatory entitlement and interest on the debt only, when you realize military spending is discretional, who's gonna fund our military? So we have a situation that is it's not, we can't continue down this path, put it to you that way. And so I would just simply say that ultimately gold and silver go higher in the face of a dollar that falls. And I don't know if it's gold and silver going higher as much as what JP Morgan is saying is that the dollar has to fall. And that's really what I think ultimately will happen. Now, when you look at what's happening around the globe, the de-dollarization, the de-treasurization, a growing union of countries, as we've talked about forever.
De-treasurization? Is that a new one?
De-treasurization, yes. Well, I mean, that's what they're doing. Why would anyone want to hold treasuries? That gold, it's up 9.9% on average for 25 years. That's doubled the pace of the 10-year treasury. And we've proven to the world that we don't like what you're doing. We'll take your treasuries and might even give them to the country or buy weapons with the proceeds and give to the country you're in a war with. That's a very tough thing to come back from. So I think ultimately it leads to more of the same. Countries seeking alternatives to the dollar, seeking alternatives to the treasury. Read Zoltan Pozsar. This is Bretton Woods 3, all about commodities. And it's also a country that has obligations that will be very difficult to meet just from tax revenue. So where are your options? Raise taxes, print money, and selling treasuries in an environment where there's only $8 trillion in treasury holdings that are foreign held. The majority of it is owed to us. Foreigners are not really keen. Now, there are some countries, if we are to believe that UK and Ireland and Cayman Islands are keen on holding our treasury debt, but the ones that have been responsible for funding our spending binge seem to be moving in another direction. So yeah, ultimately, I think those numbers might even prove to be low. Ultimately, gold and silver go higher in the face of obligations by this country that can really probably only be met through printing of money or monetization of bonds. Same thing, because just no one wants to hold our treasuries because of inflation risk, default risk, and outright confiscation risk. And I think that's really where it is in its simplest of terms. So yeah, I don't think we've seen anything yet, I guess, is the bottom line. And I'm happy with those numbers, but I would think that they could actually be much higher.
China's economy is in a funk, and people are rushing out to buy gold as a safe haven asset to hedge against economic uncertainties, sending prices of the precious metal to record highs. The country's central bank has also gotten into the act, adding 60,000 troy ounces of gold to its stash in April, according to official data released Tuesday. It marked the 18th straight month the People's Bank of China added to its gold reserves. According to Schectman, the amount of gold that China has been accumulating is significantly underreported. Officially, China claims to have around 2,600 to 2,700 metric tons, but Schectman believes they have much more. Schectman argues that China's actual gold reserves could be as high as 40,000 metric tons, much more than the official figures suggest. Not only the China, central banks around the world are also buying gold aggressively. In 2023, central banks added 1,037 tons of gold, the second highest annual purchase in history, following a record high of 1,082 tons in 2022. Schectman notes that the accumulation and repatriation of gold by these countries indicate a loss of trust in the current financial system, particularly in the reliability of holding U.S. treasuries as savings. This movement towards commodities which have no counterparty risk underscores a significant shift in global economic strategies. Now let's redirect our attention to a video.
I think you look at the amount of gold that China's been accumulating, and we're only supposed to believe and producing that they have 26 or 2,700 metric tons. They have way more than that, and their banks are accumulating it and doing so in a manner that isn't reported to the IMF. Why would anyone tell the IMF exactly how much they have? And people have been saying China's been underreporting it forever. And you look at the central banks, they are buying gold hand over fist, but also equally as impressive to me in terms of the big picture. You look at like ICBC Bank and a few of the other state-owned banks, they buy gold as a proxy on behalf of the PBOC. They work at the refineries all around the world. They don't tell this to the IMF. It's not reported. Everyone always said China underreports, China underreports. But now we're supposed to believe them, right? Alistair McLeod says, that they have 40,000 metric tons or thereabouts, 5 times what we do, and of which state owns 20 and the people own 19. But I look at like India as an example of what's really happening. They bought 1.5 times the amount of gold in the first 4 months than they did in the entire year last year, but they repatriated 100 metric tons from the Bank of England, which by proxy is the London Bullion Metals Exchange. And all of these countries in Africa, including Saudi Arabia and Egypt, have repatriated their gold from the New York Fed, i.e. the COMEX. So it's not only the accumulation by the most well-informed traders, it's also the repatriation, the removal of counterparty risk. And that's a lot, I think, what Zoltan Pozsar is talking about. That's why it's commodities. We've broken trust. And I think that's the most important thing. When the central banks say we're going to keep buying, sure, I would argue that the numbers that we all are led to believe are way underreported. The IMF says that. The analysts at Bank of Montreal says that. And everyone has said that about China in particular for years, going back as far as I can remember. So I would simply say that there is no reason for gold to have been reclassified tier one. And when you see, other than that, it's significant in terms of where it's going. And when I say gold, silver is part of gold. And as one goes, so too will the other ultimately. But I think when you see the repatriation, it speaks volumes. It's about the loss of trust. This is what it's all about, the loss of trust. And can you put Humpty Dumpty back together? Don't know. The trust is something that I think is very difficult to get back once you break it in any form of life, whether it be relationships or, in this case, the world reserve status or the center of free trade. People look at this country differently now, in many ways. And I think, maybe the most important way is the risk of having assets in treasuries as savings. Instead, they're looking at commodities, which I think have no counterparty risk, and the relevance of how important they are moving forward. I think Zoltan nailed it. So yeah, it doesn't surprise me the central banks say that, and I would argue that they're buying way more than they're telling us, and producing more than they're telling us. So, tell us just enough to keep us interested. But if we really knew how much the Chinese were buying, or any of these countries, the price would go parabolic. And it's in all of their best interest during the accumulation phase to be tight-lipped about that and not be genuine. Doesn't do them any good to do that.
Recent trends and expert analyses indicate that gold and silver are increasingly being viewed as alternatives to the US dollar. This shift is largely driven by geopolitical tensions, economic instability, and a strategic move by countries to diversify their reserves away from the dollar. For example, the BRICS nations, Brazil, Russia, India, China, and South Africa, are actively increasing their gold reserves to challenge the dollar's dominance in international trade. Additionally, central banks globally have been aggressively purchasing gold, with 2023 seeing the second highest annual gold purchases in history. How do you interpret the aggressive gold purchasing behavior by central banks in 2023? Do you think this trend will continue? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.